I don't know. I suppose we're supposed to be happy with these Zoom changes, but so far I'm not impressed. Still, it's better than anything else out there right now. Good morning, everybody. We're still looking at a market that's waiting for a reason. Tomorrow and Friday, we're going to get some reasons. Whether we jump the gun early and start making a move wouldn't surprise me, really. The market will only stay in a wait and see mode for so long before they just say screw it and wash. So, kind of trying to keep an eye on that. And if you didn't hear it yet, US dollar Japan breaching that 160 this morning. That by itself doesn't always give us the clarity we need. So, one thing that you can watch besides just looking at US dollar Japan is the 10-year for Japan back above 1.0. If things get out of control, the threat is they'll come in and do an intervention. As we're going to see with the news tonight, we've got news out of Japan anyways. It's going to be kind of a big deal. So will they wait until tonight? Will they go ahead and, intervene sometime today? That's something really to keep your eye on. Small caps down the most, Hong Kong right behind that. The Dow closer to a 0.25% in the negative. Then Japan, S&P is flat. The NASDAQ barely green. May as well just say it's flat. So market's still waiting. A little bit of Europe news in the overnight hours gave us a move to the downside, but it didn't sustain. Something to keep an eye on too with that. Europe closes at 11:30 our time, Eastern time. So one of the things that I look for is where are we at when Europe goes to close? Did Europe send us to the downside? And, we've been kind of tagging along the bottoms and breaking new lows on the day. Did it send us to the upside? We keep breaking new highs on the day. If Europe moved us and then we get into the European close at 11:30, oftentimes whatever influence or force we were getting from them is gone. So if they sent us down, we can buoy back up again. If they sent us up, we could fall back down again. Something to think about on the day, especially on a day like this, where we're one day away from bigger news that the market's been waiting on. Remember, they priced in a lot of volatility for this week. So they're expecting something. We're going to want to see tomorrow when we come in, the market maker move, the hedging on the front end, the lowered volume. We want to see them hedging and participating. Tonight, we're going to get bank stress test info. We got the 5-year auction today. I know it only shows one auction, but generally, if we have one auction, we have others too. If you haven't caught on by now, not all economic events show up, which is why we go to different pages. Different pages have a different agenda, like Market Watch. It doesn't care about anything happening anywhere else in the world. It never shows us anything, for like Canada, Japan, and it only focuses on the biggest things and ignores everything else. Go to someplace like FX Street. It does a good job of looking at everything around the world. Usually catches Fed speakers. If the schedule is far enough out in time, they'll be able to put it in here. And even with this one, it's still not showing everything. So for an example, QRA happens 4 times a year. It's a really big event. Market moving just as much as FOMC, if not more. And you'll never see it on any of these sites. The brokers never show it. It's just one of those economic events that hits traders. And then they're all looking around and saying, what the heck was that? So when it comes to looking around in the morning, trying to figure out what we have on the table, look at multiple sources, go to different pages, different websites, because they all have a different outlook. Even Thinkorswim or TradingView has that economic calendar, and it's not going to have everything on it either. I did mention Japan tonight getting data. So by tomorrow morning, we should be hedged up pretty tight, waiting for tomorrow's data. Finance Juice. This is a news aggregate website, so it's getting source news from all over the place. If you open an account here, even a free account, doesn't cost you anything, gives you the ability to filter what news sites it uses to aggregate its data. I don't know about you, but I don't really care what CNN and MSNBC and Fox News has to say, right? I just block all that trash. I don't need it. And so it doesn't show up in my feed. These guys do a really good job listing the economic data for the day. And if it's anything that's market moving, they highlight it really well. It'll be, dark red background. They often post charts with it. They do a morning briefing and an after-market summary, not just for our market, but for markets around the world. That way you got a pretty good idea of what's happening in the markets, what's on the table for the day, what are investors focused on. And it's free. It doesn't cost you anything. This place also tends to do a better job with Fed speakers who have a very short schedule. If they just decide, over the weekend that they're going to do a speaking engagement on Tuesday, a lot of places won't catch that and it won't show that there's a speaking engagement. This place tends to do a pretty good job of that. It's not perfect, but yeah, I like it. So even though we're only seeing one auction, it's at 1 o'clock today. Generally, if we have one auction, we have others. That would be at 11, 11:30, and 1 o'clock. For the 10-year Japan, 1.0 was the line in the sand for a long time. And then we breached that, got above it, even got above 1.1. Then it finally took a smackdown, but it didn't fall far. And we're already running back up again, taking another stab at it. This added with the US dollar Japan above 160. I mean, they could intervene at any moment. And the thing is, first, they have a history of not announcing it. And then they have a history of just straight up lying, saying, we didn't intervene. What are you talking about? What, not what? But it's the government. They always have to report things. And so eventually it comes out, oh, yeah. No, yeah, we did. We intervened. Yeah, that was us. But by then it's days, often weeks later, before they finally say anything. The idea is if they intervene, it should send the S&P, NASDAQ to the upside. That's not a guarantee, but when they've intervened before, we've had some magnificent moves to the upside. It depends on if they're coordinating this intervention or not. Back in 2023, when they intervened, they had global coordinated effort, and it was a fantastic move in the S&P and the NASDAQ. They've intervened a couple times this year, and if you're sitting there thinking, when, what? Yeah, it wasn't that big of a deal. We didn't really see it. Still, you can Google, find the days that they intervened, go back and look at the S&P, the NASDAQ on those days. You'll have a better idea of the kind of impact we could get today. All right, we're into new highs. Going to be looking at the dollar above 106. You got the 10-year moving closer to that 4.3%. That's kind of the line in the sand right now, getting above 4.3. We're back above the 10. That's a really good start. If we're going to see the 10-year start to rally, we could see an entirely different market coming out of this. So here's your coordinated move, just for an example. Once we broke through this 3-week moving average, this white line here, started breaking to the upside, you can see that S&P moving to the downside, NASDAQ. If they come in and intervene and send this to the downside, the idea is we're going to see the S&P and the NASDAQ move to the upside. Tit for tat, teeter totter. This would go down, that would go up. We'd expect to see gold making a move to the upside too. Gold's making a move to the upside already. Not sure what's up with that. We talk about these channels on the pivot points often, and it's worth pointing out the weekly channel this week. So here's last week's channel. It's kind of a wider channel. We opened well above it. We rallied farther away from it, kind of topped out, right? The idea about these channels is the wider the channel, the more likely it is that we're not going to go anywhere. Now, last week didn't really prove that true because we expanded pretty good from, call it 54.70 to 55.70 plus some, right? So a good 100-point move last week on a week where it was a relatively wide channel. So it's not always perfect system, but a wide channel implies we're really not going to go anywhere. We're going to hold the range, stay range bound. This week's channel is this narrow thing. A narrow channel implies that we can make some moves, that if we break out, we can really expand. Now, again, this isn't a perfect science. It's just giving us an insight on what our expectations should be for the kind of day that we're going to get, or in this case, for the kind of week we're going to get. What I've noticed about these channels is if we get a narrow channel and on that day or on that week, we don't get the move, we usually get the move the following channel, the next channel. So in this case, we're talking about a weekly. If we don't see an exaggerated move this week, we very likely might see it next week. This doesn't give us any directional bias, just implies that if we do begin to break out and expand, that the expansion could, really go. For today, we're opening above the central pivot. Central pivot is inside yesterday's pivot. Their floor pivots are almost identical, implying that with all the gyrations and running around yesterday, we really didn't do anything. That's why the pivots are almost exactly in the same place. We didn't get above R1 and we didn't get below S1. And so right now that is the range that we want to focus on. Got to get outside of this zone from 57 to 17. Get out of that. Then we can start to focus on what we're going to do with it from there. Taking a look at the ADRs, considering we're flat, we really don't have any edge on one side or the other, but we do have a little bit of reciprocation. So whatever we get on one side of VWAP, we would expect from the other. Well, right now we're on the bigger move. So if we get 15, 18 points below VWAP, we would expect 15 to 18 points above VWAP. Reciprocation. We've already set new Globex lows on the day, but we're completely inside of yesterday's range after this inside day breakout failed. Thanks, Europe, and put us back down into the zone again. We're still in a hurry up and wait mode until tomorrow. So the expectation is that we're not supposed to go anywhere. Now, news can send us out. Intervention from Japan could send us out. We're not guaranteed to stay in the range. The fact that we broke out and was keeping it and actually going somewhere and then gave it all away, kind of implies that we're not going to do that again today. Now that also isn't guaranteed, but it's history. Go back and look. When you get an inside day breakout and it fails and comes back in, especially so miserably, it's very rare to then go and break back out of yesterday's range and top the high that we've already set and go even higher than that. It's rare. It can happen, but it's pretty low on the expectations. Little tip with Thinkorswim, it doesn't show pre-market moves on your daily chart until after 9:30, right? So anything that's happening in the pre-market, you're just not going to see it on a daily. But what you can do is set your charts to 24 hours. It's still considered intraday. So you're going to see everything. And it looks like a daily. Then after 9:30, any moves that you see, they'll show up on the daily chart. And then you don't need this. But in the pre-market, set your charts to 24 hours. Just go to custom time frames, choose how many days you want, and then choose how many hours you want. 24 maxes it out. So Microsoft got that really tight zone. We've been getting these higher lows. Looked like it was going to try a breakout and failed. It still hasn't come down though. So as long as we're still holding above that 445, then this gap up that it's already started to try to wash, it could just keep on going. This is a really wide consolidation package. Now, from an IX10 perspective, it's not very good. We would have wanted it to be more narrow than this, but we'll take what we can get. Higher lows in Tesla, and they just got an upgrade last night for 260 something, some outrageous number. That was from Stiefel. Yeah, 265. Meta trying again to retest that 515 gap up and wash. You can see a lot of these. They all have that same candle. This candle right here. Like an algo print. They all got the same juice at the same time. All right, looking at things on the daily, we've had our pullback and we've set our low. So if we're using something like pure price method, then this low cannot be breached. Now we can go down and wick it. We can go below it. We just need to come back up and close above it. But really, we wouldn't even want to see price go down there and do any of that. It is holding above that 5,500. Round numbers tend to be liquidity and a pivot point. Liquidity resides on the other side of the pivot. So if we do get down there, we expect to go through it. This is the bar of control. Just mark it's low and you're good to go. But we're riding that 10 like we're looking for, a little bit of bump and run. This is a minor TRB, trend line breakover. Those usually owe us back to the top. I would aim for 55.75. I wouldn't try to max it out to this highest pivot. They'll front run that very likely. Liquidity will be in front of the pivot instead of on the back side of it. This is forming up like an IX10, but it's a really wide IX10. Those don't have a lot of excitement for us. This is the range. We need to get outside of this really big bar. If we break this 10, we break this low, it opens up this 20 period moving average, 54.72 or 54.60. we'd be going to the 20 next. Not only that, we'd be looking at first, we need a lower high. It's not a must have, but now that we've rolled over and we've come down and we've set this low, we've started to lift up off of it. Once we get far enough away, this is a low that's confirmed, but we still need to have a lower high if we're going to make the move to the downside. Otherwise, on this move up, we got to have an equal high or better. Because if we don't get an equal high or better, it's still going to be counted as a lower high. If we get a lower high and we've got this low here, then we'll be looking for price to come back down, break this low. Kind of just back up and see how it looked in the past, right? That's what markets do, pure price method. So where we set a high, pulled back, failed to get a new high or an equal high, broke that low, went even lower, set a lower low. Right? It's kind of the idea. We have an MDP this morning. That's a missed daily pivot. Markets tend to hit their pivot 80% of the time. So if it's a day where we have not hit the pivot, then we're doing something unusual. We're doing something in the 20th percentile. So far today, we're holding above this channel, but it doesn't really put us in a bullish bias, and it actually makes that channel a target. So that's a simple enough play. If we break the current low, this cog line at 55.32, then that'll be the goal. It's not much. It's a 4-point move, but 4-point move with 10 contracts. There you go. I'm good. Take your day. Go golf. Just keep in mind we're already extended from VWAP. So it wouldn't surprise if we pull back into closer to VWAP first. And volumes within normal ranges, 87 is fine. 10-day, 30-minute volume profile with TPO. The TPO is in blue, volume profiles in green. We've pretty much washed away all the volume from this lower zone. And we've stayed in this central area enough that we now have the point of control moved up here. We don't really have any sort of big risk until we break below 54.92 cog line. That would be breaking through this lower high volume node zone. Once we break through that high volume zone, then we've got this air pocket we can fall through. That should get us down to something like 54.11 cog line. Just keep in mind, even though we don't necessarily see a pivot here, a correlated market could hit a pivot and that can turn this. And as for pivots that are down here, we don't see any on this chart. But if we were to go look, I'm sure we could lay out, last week's high, last week's low, last week's close, maybe a monthly level. There's pivots down here. We would just have to go hunt them now. There is a bit of a discrepancy between the TPO's point of control and the volume profile's point of control. Think of these two as a volume by time and volume by price. We've got more volume by time at the round number 5,500, and we got more volume by price in green up here at this other cog line, 55.32. That pivot point is going to act like gravity and a magnet, and it's going to take a lot to see price get away from that zone, especially since it is a COG, center of gravity, a cog line. If you try Googling that, by the way, you're going to end up with John Euler's indicator that he built way back in the 90s or something. That's not what we're referring to. Somebody else who didn't know John Euler had something called center of gravity referred to these gravity points on the ES as centers of gravity, and it kind of stuck. So it's not John Euler's center of gravity. It's just the S&P gravity points. So we carried forward this point of control from Monday into Tuesday's trading, looking to see if we were going to get any response out of price when it got there. And we can see how price responded to it. And then it finally started washing it through before we got through it. It won't always be that way, but it does provide insight having the point of control from the previous day in today's trading. I don't carry forward every single day's point of control, right? Like we're going to carry forward yesterday's point of control from down here because price hasn't been there yet today. But if we were looking at Friday's point of control and it was Monday morning, we wouldn't put on, I wouldn't put on a mark here because price has been through that level already. Now the textbooks will tell you to mark it out. This is the value area high. This is the value area low, and this is the point of control. The books tell you, look at the previous day's point of control and mark those levels out into today's trading zone. I've got enough pivots. I don't need more, so I don't do that. I only carry it forward if it hasn't been hit yet. The one from Monday, we don't need it anymore because it's now been hit. So we'll just steal the line and bring it down into Tuesdays. And now we've got a new VPOC down there. The V stands for Virgin. It's an untouched point of control. And I didn't name this stuff, so don't send me messages. Dead cat bounce and Virgin lines. Somebody way above my pay grade names all this stuff. This is setting up really nice for reciprocation, though. It doesn't get much better than that. That is looking really good. I like it. I think it's going to be a good day, Tater. The revisions today and the bank stress test today could provide some volatility. Yeah. Yes, but it's tomorrow's the bigger one, right? Actually, I think tomorrow's the GDP revision. Today's just auctions and crude oil sales and Japan. So tomorrow, GDP 8:30 in the morning, and then Friday 8:30 and 9:45 and 11. Friday's got a lot. This is our range for the week. If you go back and look at what we have been doing on a week-to-week basis, it's not often that we stay so compressed and so sideways this deep into the week, unless it's something like Wednesday, FOMC is on Wednesdays, things like that. But it has to hold one more day still because the bigger move or the bigger economic events are Thursday and Friday. So right now, Monday's candle is the candle in control. We could do things like mark out the 50% level. We will respond at that 50% mark, but getting above it, below it, it's not really going to add a lot of value or context. We got to get completely out of this zone. When I talk to newer traders who are struggling on the intraday and they say, well, I didn't know it was going to be a choppy sideways day, so I tried to trade. And then, of course, they get chewed up and they say, if I'd have known it was going to be this kind of day, I wouldn't have traded. You can tell in the pre-market what kind of day we're going to get. Not 100% of the time, and things can always change later. But sideways is sideways. And what seems to throw the newer traders off is they'll see something and say, well, this is trending. I thought it was trending. It was trend. This is trend. This is trend. Yeah, no. I mean, theoretically, yeah, textbook definition of trend. If price continues in the same direction, then quote, it is trending. But that's not the kind of market you want to trade, right? When you zoom out and look, that's some pretty nasty stuff. And if I go to a small enough time frame, even this one candle would look like a fantastic trend if I was on a 10-second chart. But we're still inside of Monday's range. Until we get outside of Monday's range, we haven't gone anywhere. And if we haven't gone anywhere, then we ain't trending. So if we can get outside of Monday's range, high or low, then we've got the green line up here, 5,600, or we got the red line down here at 5,470. We're still more than 3% above the 10-week. So we're sitting right where we want to be. We're not overbought. We're not oversold. We're not overextended. It doesn't owe us any sort of mean reversion. And we're still holding above the 10-day, not by very much. And the max is a long ways off. It's not the max. It's just where, at least for this year, for 2024, that 1.4 and 1.5%, that's about as far away from the 10-day as you want to see price. If we get beyond that, and it tends to mean revert. So it's the edges of how far away from the 10-day we want to get. We're nowhere near that level. We can move an entire 1% away from the 10-day moving average. And at that point, we would only slightly be concerned about a mild reversion back to the mean, any sort of pullback. So we're good. We're fine. Now we were getting some divergence yesterday, and it's kind of like deja vu all over again, where we're seeing the Mag 7 making moves, but we weren't seeing it play out in the sectors or in the breadth tools or anything else. There was also some money flow divergences yesterday where 65% of the S&P was moving to the downside, but more money was going into the S&P than coming out of the S&P. And you look at things like cumulative tick, it was below zero, you know, is just deep moves to the downside, and yet the weighted AD really divergent with the cyan line. It just never expanded it even close to 200 on either side, let alone getting beyond that. The ticks, there's the 500 line on each side. We tagged 5 a couple of times, but we never got close to 750. So no confirming push, breakout, no nice expansion signals. And yet the NY Fang, you know, had some really good moves, especially in the first part of the day. Strong moves up in this, which is what I keep highlighting. This move from 9:30 to noon yesterday, at the same time that the weighted AD was moving sharply lower and the cumulative tick was moving sharply lower, and the ticks stayed mostly red all the way past noon. Deep red, which is little touches of green along the way. Lots of divergence out there. Lots of uncorrelated market moves. And it's not that rising tide where we think, well, okay, we're going to get tech, we'll get Mag 7, they'll go up, it'll be a rising tide, it'll lift everything else up. Nope. Selfish. They're just running by themselves and they're not carrying anything or anybody else. How rude, right? Starting to see a little bit of finance moving around again. Communications, energy, crude, seeing some moves in that. Things that are breaking down rather than breaking out: home builders, home construction, real estate, metals and mining, uranium, China internet ETFs, the KWEB crowd. Those gave breakdown signals, but some of those are actually up this morning. So semiconductors, China ADRs, the Mag 7 was up. It seems like it's dropping back down again. Not very much on the upside. Semis, China ADRs, that's it at the moment. I really want to see that turn around. And the VIX is up, but it's not really useful at this point. Looking at things that are down: nat gas, bonds, Bitcoin, more Bitcoin. And that's it. The rest of these aren't moved enough to reach our qualifications. Dollar just hit 106. If we get above 106, I think we could really break down in the S&P and the NASDAQ. We got crude in this really big range here. I'd like to see this break. If we can get above 82, we could really expand to the upside. Measure the zone, plot 50% and then 100%. And if we break 80, then we could at least get back down to this year-to-date VWAP. Call it 78.5. If you don't do the futures, USO, the ETF looks pretty good. It's this range here on the week. You got this highest volume section here. Get above that, the high liquidity zone. And it's that same sideways structure on the daily. We got an inside day breakout on semiconductors, but it stalled out on the lines that I drew earlier this week. You see this range, that 265, we wicked above it, came right back in again. That's what we have to get out of. It does look like we got a gap close though. This was the level we needed to hit to close the gap. It got that done. So 265 at 80. Now that the gap is closed, it really doesn't owe us anything else. If we can continue to expand to the upside, then 269.55 is the level we have to get across. The reason I say that is now that we've started to fade back a little bit, what we could see, think about how it closed, and then it gapped up into an old gap, closed that, now it's falling back down. If it falls down to close the gap and find support, it can rally up and break that 269.55. The China ADRs are up this morning, but they still look like trash. The target is still very clear. It's below 27. It's this anchored VWAP down here. You know, it's like where are we going to VWAP? Come on. We'll get there and then we'll talk. It's almost self-fulfilling prophecy at this point. Tech through XLK, inside day breakout, testing the top of this really big candle. If we can get above it, just expand the measurement. It's the half back at 277.53. Let's get through that and we can make it all the way back up to the top. This is like a really skinny TRB setup, but 233.50 be a nice move. All right, you got to be careful with expanded tech. A lot of times it'll just be an algo print like it is this morning. It's all the way down here, which is why it's so negative. But there's no real flows here. It's just an algo print, just one print, and that's it. It's not like we're getting a bunch of candles or movement there. So we can see this big gap down. I would let this actually start giving some prints. Otherwise, I would seek a gap close. Now, keep in mind, to close the gap, it's got to come all the way back up to this spot, to the high. I know different analysts do this different ways, but as far as I'm concerned, if it closed up here and it opens down here, then the gap is not closed until it gets back to the previous close. Other analysts will say as soon as it touches this candle in any way, if it gets inside the body of this, or even if there was wicks, if it get in the wicks, they'll call it a gap close. I don't. Doesn't mean that I'm right and they're wrong. It just whichever way you choose, do that consistently. Don't change your mind and change your definition of what it is that you call a gap close. A lot of things in technical analysis are like that, and although it's not really something that we promote or highlight often, there is some personal discretion that has to go into it. It's not as black and white and cut and dried as we would like it to be. Jets just look nasty. Nice breakdown this morning. It is worth noting all of these wicks, right? Coming all the way back to February. When we get below that 19.5, they bid it back up. We've seen a lot of protection at this level. At what point will they no longer protect it and it just tumbles? Can't say, but you know, they've done a really good job so far. I think if we really see crude expand to the upside and we get this kind of move to the downside, I think it'll just pick up speed because, you know, crude's going to greatly affect jets anyways. It is worth noting that we're underneath the year-to-date VWAP with a full solid candle when all of these others, you know, they were just wicking down and we came right back up again. Now the day's not done, so this could turn into a really long wick if we rally back up above that anchored VWAP. But for the moment, we're not there. We're under it. 19.5 would be the line in the sand if you were going to do like covered calls or say call credit spreads or something. I would use that as the line in the sand, hide behind it. You could even straddle it just to get closer to price. But yeah, it's going to be pretty nasty. Think about it. If it does finally break, though, there's a couple of ways we can examine all of this. I think maybe we'll just go to Thinkorswim to look at it. We got the half back of this entire run, somewhere around 1870. We've got just this current run, which really we've broke underneath the half this morning. We can also measure this range that we've been in, and we can plot those levels to the downside with measured moves. So a couple of different ways that we can approach this. I think at the very least, we can get down into $18, test this pivot down here, 17.5. I'd be out by 18, but 17.5. And, correlation. So if you're looking at jets, go in and individually look at the different airlines and see which one of those may have the better chart setup or the better options. Because I don't think Jets has very good options. But you can look at, Delta, Spirit, whatever, right? Go down the list. That way, if you do get into an airline trade, you can watch those other airline stocks. If they start popping to the upside, it's a bit of a hint that your stock probably will too. Bitcoin was trying to rally back, and so the proxies were getting a little bit of love, but right now it's not doing much of anything. And now it's got this really tight range. Technically, it's an IX10, but that's trash because it's a really, really big range. It's a 2-point range almost. So that's worthless, but it is a really tight consolidation. Putting on something like a straddle wouldn't be a bad idea. This is going to move. Which direction it goes, I mean, flip a coin, but it's going to move. And since it's not an overly expensive stock, you should be able to put on a straddle without, an ungodly amount of money. Yeah, big gap down in staples. What was one of the staples this morning? General Mills missed, I think. And there was something up with Campbell's soup, but I think it was General Mills. No, I didn't get the Spot Gamma's AM founders notes. Um, I will, I'm sure by the time I'm done, they've come out with the AM and I'll get it shared. Sure enough. So their numbers haven't changed on the SPX. Upside scenarios 5,500 with an overshoot into 5,510. And that's just right outside of the range that I've got highlighted here. That's their resistance across the top. And the downside is 5,400. And they say if we break that, then it's very likely going to send us right down to 53 without even really pausing or stopping along the way. I would argue against that a little bit and say we probably will get something from this point here, this gap close. The implied range for the day is 0.67, so pretty narrow. Let's see. Get the gamma's numbers, and that will yeah, the gamma index is still, it's at 0.8, and it goes from a -4 to a +4. If it was +4, it would say we're not going anywhere. If it was -4, it would say we're likely to break out and run. We're basically at 0 in the middle between the two. I'd say it's another hold your breath, sideways and wait. But that we've been doing that for a few days, and the market will get tired of that, and it won't take much to break us out early. Big data is still tomorrow. So we just kind of lean on that. Watch the clock. We got auctions. Be careful, be safe. I'll see y'all tomorrow.